Hello, this is a special TradeSight educational video charts brought to you as usual by eSignal. Wanted to do something we haven't done before and walk you through a week's worth of our trading. And I want to do this in a methodical manner because we've been trying to prove a point to some people that there's a big difference in how the market behaves based on volume in the market. So what you've got up here in front of you to start with is a daily chart of NASDAQ volume. And back in August, you can see that the daily closing volume had just fallen off a cliff. And this happens every year in August. Markets get really light and slow because everybody's away on summer break. And so the last 2 weeks in particular, but even the week before that, had been very, very light this year. The first week of August looked good, but then it really fell off. There's one day where you see the volume kind of hop, and that was options expiration, and then everything else in the back 3 weeks of the month was dead. And Labor Day was the first day of September. And we had talked about the fact that once you get past Labor Day, the volume comes right back. And you can see on this chart that it certainly has, and we've had significantly improved results, well, more trades triggering, things moving further than what we had in August, which is why we back off in August. We lower our size. We try not to trade too much. I'm going to walk you through what it really means to have a market with a little market analysis and some good pattern setups, and how much you can really benefit from a market that's got good trading volume like this last week. So what I'm going to do is I'm going to go day by day. I'm going to show you what the market did, what the S&P did each day, and then we'll look at the trade calls that we made here at TradeSight and see what each of them did on that session. So here we're going to start with, this is the Monday opening bar, is that first bar that you see, the little gap down. And I'm going to make this day play out. And this is with our what we call our futures levels for that session. And the shaded gray area that you see is what's called a value area. And so on this particular day, we have a couple of pieces of information. The value area, often, if you can get into the shaded area, will draw the market across the shaded area. And we also have the gap, and 80% of gaps do fill the same day. So what we're looking at here is initially our gut is that maybe there'll be a move back up to fill the gap that would also take us into the value area. And this is an important point for later in the week. So in this case, if we do move up, both the gap fill and the value area are above us working in unison. But what I'm going to do is walk you through this trading day, and you may hear some sound alerts as I go through, as this certain bars set off alarms on my system. But what you can see is right out of the gate here, we did start to head lower. So we didn't initially get a push into that gap, and that's fine. And as we do start to break solidly lower, we're going to be looking on the short side, even though in the back of our minds, we'll be keeping in mind the fact that that gap is still above us. So let me jump through the entire day so you can see how it played out. You can see we obviously pushed significantly lower on Monday. Here we are at this point. This is lunchtime, and we've already dropped significantly on the S&P. All right, and here is the rest of the day, kind of flattened out a little bit over lunch, as it often does. Tried to push a little lower in the afternoon, and nothing really happened. Okay, so most of the action was in the morning. All right, so now what we're going to do, let's take a look at all of our stock calls that triggered during the trading day. And to give you an example, we typically risk about 20 cents, a little more than that, on a normal price stock. We do more, like 50 cents when the stock's over $100. So we had a trade set up in Apollo Group, APOL. You can see that the yellow line was our short trigger. You can see where it triggered. It did not hold a move back up over 20 cents from that 25.93, ultimately went down. So we were looking on the short side because the market was heading lower, as we saw. We had a trade call off the daily charts of IDXX. That's $115 stock that triggered early. You can see that one worked for a couple of points to the downside all day, never put you at risk. We had a short call on Caterpillar that triggered about 10 minutes in when the market started to break. So that one never put you at risk all day. And we had a short call on Amgen. Now this is a $150 stock, so we're looking at about 50 cents of risk. It never went and held that, and then went lower and again worked. And then we had a Tesla short for the day. This one didn't even trigger for about an hour. And this one worked for up to 8 points to the lowest target. Okay, and again, this one never came against you at all. So technically speaking, one of these trades did not, it actually triggered when there was no market support, and that was the one that triggered in the opening 5 minutes of play. We generally encourage people not to take trades in the opening 5 minutes of play. This was a daily chart pattern that caused the trigger, so you could go for some small size. And that one did work, but even not counting that one, because it triggered in the opening 5 minutes, we were 4 for 4 on Monday. All right, so I'm going to take a second here to push this forward to the next day. And now I got to reset my levels so you can see what the futures levels look like. on the second day of the week, which was Tuesday. So that was the 23rd of September. And now you can see, now for this particular date, the first bar, I'm going to move forward, is another gap down. So once again, the gap fill play would be to the upside. The value area, the shaded area, would be to the upside. They work in unison. We saw on Monday an exception day where the gaps did not fill. 80% of gaps fill the same day. They did not fill on Monday. Okay, let's walk you through Tuesday in the markets. In this case, we did start to head up immediately. We actually had a great futures call that played on this as well, and we made money on that futures move all the way to the gap fill early. Got up and filled the gap, which means we got to the closing price from the prior session, and that brought us into the value area. So now we've kind of completed that gap fill. Now we start to look for anything can happen because you did get that gap fill out of the way. And then let me just jam you through the rest of the day. Notice that over lunch, we're back near the lows of the session. And we sold off again late in the day. Although part of that occurs after the actual close of the stock market. The futures are open an extra 15 minutes. Okay, so you can see that generally speaking, we had an upward move early. We kind of would have thought that because of the gap. We then got a little bit choppy. By the first 30 minutes, we'd already traded most of the range for the day. It wasn't until late in the lunch hour that we started to kind of play with the low of the day and try to break lower. And it wasn't a significant move after that until the last few minutes of the day, really, which is a little late to be trading. So here we have a trade that didn't end up working out. We triggered short. We actually closed this one as we posted to our subscribers, even when it made the second attempt and didn't work. We have a trade on the long side early. Remember, the market headed up early in LVS, made a little money, didn't do anything too crazy for us. We had another trade on a gold ETF that's a little different. It's not really directly impacted by the market. We had a short trade that triggered when the market was heading lower on Google that worked for us a little bit. We had another short trade that worked well on MDVN. Got us a couple points there when the market was heading down after filling the gap. We had another trade late in lunch. Remember when we swept the lows late in lunch? We had an Amgen trade that worked for a little bit. It didn't do anything major there, but it did get us enough. We take 50 cents on a partial as well to get a first piece locked in. And we had a Twitter call that didn't really do much. We'll call that one a loser, and it was initially because it didn't work out on the trigger. And then we had one more long idea before the market direction was not really green at the time. This trade ended up working, but it's not a trade that we recommend taking because of the fact that the futures were nearer to the lows of the day, let's say, at the time. So even though this trade works, we don't count it. So out of all the trades for the session, if you count the ones that triggered that were in the direction that the market was heading at the time, only 3 of these trades actually triggered with market support. 2 of them worked and 1 of them didn't. So on the first day of the week, we were 4 for 4. On the second day of the week, we were 2 for 3. All right, let's go ahead and move through and take a look at Wednesday. And Wednesday is where things really get interesting and really important to know some of these factors about the market. So let's take a look at Wednesday. I'm gonna shift my levels again, so now we can see. Okay, as we start Wednesday up here in a second, we're going to see the futures levels for Wednesday. I gotta put the date in right. The 24th of September 2014. There we go. All right, so here's what's interesting about this. Let's look at the initial bar, first trade of the day. See how we gapped up? What this does is, it doesn't happen often, but what it's done is the gap fill is down, but the shaded area, the value area, is up. So it makes for a very technically conflicted market. And we warned our subscribers at the point that this was happening right at the open. We could see where the futures were going to open. We said, look, right now, early on, you're going to have a market that's in a tug of war both ways because the value area is to the upside. If it breaks into that, there's going to be a desire to fill it and move across it. But at the same time, the gap is below. You've got a conflict in what you're seeing in terms of the market. And initially, we did head up, as you can see. And then we immediately rolled back over. And then there's the gap fill on the ES, and then we tried to bounce. And then we tried to head back down. And meanwhile, if you also look at the NASDAQ futures that day, they had not filled their gap until we got down to that low right there. Once that gap was filled, we tried to head back up. See how this is very choppy versus what we had seen the first 2 days. First day we got a solid day down. Second day we got that gap fill first. Everything was very decisive. Here, not so decisive, so we don't have as much to do. And then let me just map out how the rest of the day played out, and then we'll go take a look at what we did on the stock side of this. I'm going to get this to refresh so that the shaded area is actually going. So here, look at how later in the day, after filling the gap finally, we make the move that goes across the value area. I talked about once you enter the value area at some point in time, you usually cross the value area. So now that we started to do it early, but then we had to come back and fill the gap instead, and now we try to head up. So we've switched directions a few times here in the market. Not nearly as clean and interesting as some of the prior days. Let me get us all the way to the end of the day. And we kept going. Higher and higher and higher. And there it is. So we closed the day actually with a pretty decent upward move in the market after what was a pretty light start to the day and a very choppy start that we knew was going to be choppy because of the difference between the value area being above us and the gap fill being below us. So take a look at our trade calls that we made for this session. And we took this one. This is a daily chart trigger. This trade is a $40 stock, ended up working out fine for us, and it triggered when the market was heading up in the afternoon. Here's a look at Twitter. Now, again, look at this Twitter trade. This is early on when the market can't decide. Am I filling the gap? Am I going into the value area? This trade didn't work at all. Didn't go anywhere wrong, really, but it couldn't get going even later in the day. So this was a choppy loss early in the morning. Here's another one. When the market tried to head up to fill the to go into the value area initially, we had an eBay trade trigger long. We kept this very tight. We kept this to a 10-cent loss because the market rolled back over, headed into that gap. So again, early on here, this looks really tough. It's not a very ideal trading session. We did have a nice winner early that just worked all day, an energy play in this ASML. There was a $90 stock that ran, never really went much against you and worked very well for the session. Now let's take a look at the afternoon, though. This is where it gets interesting. Small winner here in the CELG, nothing major. Small winner because it triggered late in the SanDisk, nothing major. But look what else we got. Remember, those futures were running all afternoon. The market was solidly heading up, having sorted out the mess from the morning with the gap fill in one direction and the value area in the other. So we get a nice big winner out of Goldman Sachs. And the one you don't see here was a soft call in the room on Baidu that also ran a couple of points. It was from 119, the 119 area on Baidu. If you ever get a chance, go back and take a look at that chart. So that ends up being a really nice day, but because of the afternoon, I'm sorry, 219 on Baidu, ends up being a really nice trade, but because of the afternoon, after what we knew was going to be a tough morning, just because we didn't have any clear indication of which way we were supposed to head with those conflicting signals early. So you got to be careful of that. You got to keep your trades really tight until the market sorts out its mess. And then if you get something after that, which we did for the day, we got a nice big move to the upside, then you try to take advantage of it. We had several winners there. All right, so now let's fast forward a day. Let's go into the 25th. So I'm going to set my levels now for the Thursday session, and here they are. And so this is what now this particular session, little gap down in the market, but we're inside the shaded area, which means we're inside the value area already. So the value area is not really a factor, but the gap fill could be. Okay, that's just the thing to keep in mind. And what does this play out as? And then let's take a look at what we did for the session. So we headed lower, and we headed lower right away. Okay, and we just started going. And so once you kind of start breaking the lows of that opening 10 minutes, you know that we still have to remember the gap. Let's not forget it. We saw what happened yesterday. You can't ever forget it. But the direction right now is to the downside. And guess what? There it is for the first hour and a half of the day. A big sharp drop in the market after the gap down. Rest of the day, played with the lows over lunch. Tried one more time. I'll point out that we got what's called a 13 Comer buy signal right there. And look at that. That 13 buy signal basically ends up being the low of the session. That's pretty amazing on its own right. We had stayed away from the value area, and we did not fill the gap. But once we started heading lower, after the first 10 or 15 minutes, we've got a clear idea of market direction. What ends up happening for us on the stock side? What kind of trades can we pull off on the stock side once that starts to happen? Well, here's what we look like. And keep in mind, look at the time of day that these triggered at. It didn't happen in the first 5 or 10 minutes where we weren't sure yet. It happened after that as the market was heading sharply lower. Here's XONE, a $24 stock that worked for up to 2 points on the session. Here's VNDA, an $11 stock that worked. Here's GPro, which is a stock that's been on a tear to the upside, but we caught a short for a point and a half, up to a point and a half on that particular trade. We had a SanDisk short that worked for a point and a half as well. That's a $90 stock. We had this one here really did not work much. It only had worked for a small amount. It worked enough technically to get what we call a partial because it was only a $16 stock. But either way, you don't have to count that one as long as you kept a tight stop on it. This one, the INCY, this was a trade call we had from our daily scans. But again, look at this one. It triggers 10 minutes in when the market direction is not heading upward at all. So you should not have taken the long ideas. That's why this says without market support. We only take trades with market support. Here's the NTAP. Had a short idea here under 42.86, triggered about 40 minutes in, worked all day. Here's the price line. We made, it could have gone up to 12 points to the low or 8 points pretty quickly on the price line. Granted, it's a $1,000 stock, but it still moves. So you can't use the same size you would, but it was a nice winner for us. And so we ended up with 7 winners out of 7 trades that triggered with market support on Thursday. And that's a pretty nice trading day overall. Again, Monday was nice, Thursday was nice, Tuesday was okay, Wednesday was okay. But none of them were red at all. And if you really want to see how the week wraps up, let's go take a look at Friday. Now, keep in mind, Friday was, after that big move, it's a Friday, probably not as exciting as every other day. And it's also the Jewish Rosh Hashanah holiday, which means things are typically a little bit lighter, and we kind of expected that going in. So here's a look at Friday. Here's our new levels for the session. Let's take a look at that first bar. We actually opened dead flat for the day, no gap at all. And we were inside the value area. So you don't have a value area per se or a gap to worry about. Matter of fact, if anything, if you're going to have a dull session, you're probably going to get stuck inside the value area, which is this shaded area. And let's take a look. Isn't that amazing? Look at that right there. Let's pause and just look at that chart. How we went from, and I'll refresh it so you can see all the way to the shaded area to where we're at right now. The high of the session is the top of the shaded area. The low of the session is the bottom of the shaded area. That's really useful information when you also know that you have a light volume day because of the holiday. We get stuck in that shaded area. We spent most of the day doing nothing. What's interesting is there was a run in the market. See how you just go sideways? You don't trade when the market's going sideways like this. There's no point. There's no volume in the market. We're back to a lighter volume day, and you've got this sideways action inside and exactly inside the value area. Until after lunch, we did actually get a run late in the day. This is shocking and interesting. We actually had a futures call just in case to go long and buy the futures if it broke over the highs. And late in the lunch hour, it did. And it ran. It shook off a 13 sell signal, and it kept going all the way to the R1 level. We ended up selling it. Our last exit on the futures call was 1979. That ends up being one tick off of the high of the day. And then we go sideways. What did we do for stock calls on Friday? Since the market was obviously light, we predicted that it would be light. It was light early. Let's take a look. We had one trade call early that triggered short with the market trying to head down a little bit. Remember, it wasn't heading down much. And we got stopped out of that trade for a small loss. Lost about 30 cents. It's a $90 stock. And we had a trade call on Caterpillar that triggered in the afternoon when the market started to run and worked. And that's it. We only ran the 2 stock trades for the session because we predicted it was going to be light, and it played out light. And see how factoring in the market volume is so absolutely critical. And what else is important is to understand. I'm going to bring the market volume chart back in here and let you see something that you might not have noticed when I first had it up here. Here's a look once again at NASDAQ volume on a daily basis. Go back and look at the last 5 dots on this chart, which is this last week, obviously. Friday's the last dot. It's the lowest dot. We knew it was going to be a lighter day. We didn't do as much. Still had a nice futures winner for 40 ticks. Still had the one Caterpillar play in the afternoon. So we had something just in case. Had one loss early. But take a look at this. You go back to Thursday. 1.8 billion, that's good volume. That was the top of the week. Wednesday was poor. Remember, Wednesday was the day with the conflicting signals early on. Tuesday, not as good as Monday, and Monday was the second best day of the week. What were our 2 best trading days of the week? Monday and Thursday. That's when we had the most winners. That's when the market made its biggest move. The 2 days with the most volume were the biggest winners. What was our tally Out of all the trades that triggered with market support for the week, we had 23 trades trigger over the course of the week with market directional support. 19 of them won. The other 4 we kept to a fairly tight loss. That is how you trade the market. That is why it matters if you have volume. That is why you sit out of August when the market didn't do anything like this. I hope that's been useful for some people. Please hit us up in the lab if you have any questions, or email us at tradesight. Also, please like us on YouTube if you do like this video. It helps us out. Have a great week.